We had a 100% win rate on our last 4-hour public swing trading experiment. And so far, just following along with the trades we've done so far, that equals about $11,000 in profit if you were risking 2% on a $1,000 account. Seriously, that's mind-blowing considering it is literally just a few hours. But we'll come back to this here in a bit. Of course, we have to start with our introduction that says, welcome, you guys know what we're doing here. Welcome back to the channel where hopefully we're bringing a little bit more reality into the trading, day trading / investing / this world. We already know there's so many people flashing their Lambos on Facebook, and then you go to sign up with them, and then you see, they post $1 million, screenshot result, always, of course, quadrupling and 5 billion entries in the same direction. But then you go look at the account on the broker, right? And you see what? You see, blown account in their little, PAM situation. So my only goal is to help people see that trading is as easy as you make it on yourself. Some reasonable rules, some reasonable management. You got to pick a strategy and kind of stick with it, or at least pick some kind of system, and ta-da, Bob's your uncle. That's literally all it takes. Obviously, we have to have our little disclaimer. Please forgive the weird view I've got here that says everything we talk about on this call is for educational purposes. Nothing I say, or with all due respect, anybody else that's, talking on YouTube or all these social media platforms, should be something that you bet and stake your life on, right? It should not be the case. You are 100% responsible for your trading accounts, for your investment accounts, for your financial future. Me or no one else in the whole entire planet gets to, have any dictatorship over that. So don't trade what you can't afford to lose, right? Period, across the board. Whether, again, it's for me or anybody else. Some people, as you get to certain levels, $10,000 loss is a drop in the bucket. Some people, they're going to fight you over $250 because it really matters. So only invest what you are 100% okay with losing 100% of that. And if that number is too high, you're investing too much. So without further ado, let's go take a look. Our calls from last week, 2 weeks ago. We're doing this every 2 weeks. All played out beautifully. Of course, that video is public. It's live. It's on YouTube. It is not meant to be some kind of a sales pitch or an upsell or this, 1-hour class that says, here's, a whole bunch of free information that just leads you somewhere else. This is 100% free information. If you do nothing else with it, you can literally go to any broker you choose. Of course, I'm biased. If you don't have a broker, go to the ones in my link tree and sign up with a demo account. Pay nothing to no one ever, or maybe not ever, but first, get your feet wet in this industry. That's what my hope is to give you 100% access to real information so you can actually see, can this work for you? Can you make it work? Is it plausible? Is it possible? So here's what we've done so far. We started this 4-hour public experiment in and around May of this year, right? This is technically the second week of May. I'd taken that whole month-ish off from simplicity to this system. And here's what we've accomplished. First things first, this is human, okay? So this is human intentionally. This is meant to show you, of course, there's going to be fluctuations. Please take it with a grain of salt like anything else. But the real nitty-gritty, and every one of those YouTubes are public. You can go back and watch any one of those and fact check this. In fact, I encourage you to do so. Remember, we're trying to predefine stop loss and management. This way it's not subjective. So every trade idea or analysis we discover tonight together is predefined, meaning it's not, well, she did that better because she did this, or she had this, or that only works for so-and-so. All predefined. So in theory, you should be able to achieve comparable pips, comparable growth, comparable results. Remember, that is pretty simple. We're considering structure as a stop loss on the 4-hour. Obviously, that part is subjective. It's going to be 100% up to you, your account size, whatever. I'm recommending 1 to 3 fractals back and adding a 1 ATR cushion personally. And I say that because, as you'll see with some of the trades, it's all kind of consolidated and icky. And some of the trades, it's like super clear as day. You're like, whoa, this is a no-brainer. And since we can't dictate that on a regular basis, we have to define it in advance. Remember, always, you're protecting your profit as you hit 1-to-1 risk-to-reward ratio. That is my rule that I hope that you are applying to yourself. Either way, I'm recommending that you always protect your profit, scale out of some of your profit, lock some of your profit, trail some of your profit, or just close your profit within 25 to 50 pips for people who are not as comfortable with ATR or within 1 ATR on the 4-hour time frame. So again, all of that is defined. So it is defined. We're good. We know exactly what we're talking about. We are 11 weeks deep into this. You can see the good, the bad, and the ugly. This one's kind of super unfair because, well, Neo doesn't have a lot of an ATR, but you guys get the gist. Last week, and I'm actually kind of excited to talk about a few of these together with you guys. We are so far up to about 14,000 pips. That is not nothing. That is a lot of points for those of y'all who watch the news. When they say, Dow Jones, blah, 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 points, remember, you multiply this by 10 to get points. Okay, so that's 140,000 points. That is subjective to broker, but you guys get the idea. So we did 3 trades on the 19th, which is about 2 weeks ago now. Those 3 trades obviously played out beautifully. We also discussed silver as a discussion, did not call a trade idea on it. You can go back to the YouTube if you're unsure. This is the outlier, which we're going to talk about. I'm kind of excited, a little bit geeked out, but I'm trying to show you guys also the good, the bad, and the ugly. So this moved over 2 ATR in the 4-hour time frame, just so you guys are getting comfortable with knowing why that matters and how many ATR you can go for and what kind of targets do you think are good. The more we have this documented for you, the more you can go back and say, hey, wait a minute, I want to take this trade, paper trading or real. I definitely want to make sure I'm protecting. I want to set an alert at 1 ATR or 2 ATR, et cetera, et cetera. Like whatever works for you, it's 100% okay, but definitely want to pay attention to that. So overall, this one moved 2, not very much. Still not too happy with the US dollar, but we'll go over that. This one moved almost 10. And of course, this one moved 9. Kind of crazy. If y'all were live this morning watching that Japanese pair, I had multiple systems all frozen up. It was a really good time party, but those trades based off of this information for stop loss equaled this just over. This is like a 1.13 to 1 risk to reward. This was just over a 5 to 1, and this is like a 5.5 to 1 risk to reward to kind of give you an idea of what these actually equal based off of that exact trade. So what does this mean? Don't worry, we're going to go over. We're going to review these together, and we're going to look for a couple new trades tonight. Just that hopefully you can follow along, take some trades of your own paper trading account and see, wait a minute, can I do this? Will this work for me? Can I eventually grasp this concept or have some success or some profit in trading? Before I do that, I had to pull this up because, well, we're 11 weeks in, averaging about 3 pairs per week. We know some of them have been 5, some of them have been 4. But to give you an idea, we're going to round down to 3. So that's about 33 trades. And I'm really excited to go over this with you here in a second. So please pay attention to this part. It's definitely worth your while. Before I do that, I want to pay really close attention to this average win to loss rate. Remember, this is subjective because each one of these pairs is worth more pips, less pips. Each pip has a different dollar value. There are some other things to consider, but just, again, for blanket level information, okay? So this is just the, 10,000 foot view, right? The pip count for each one of these is averaging about a 4 to 1. And granted, we're not going to go off of that, but I do want you to see what this actually equals. Remember, this is averaging about a 91% accuracy. That's based off of, I guess that's 36 trades more accurately. 36 trades in total. That's not bad at all. We're completed 10 weeks as of now. We're starting in our 11th week. Remember, each one of these videos typically takes about 20 minutes. Takes us longer to make it and fix it than it does for y'all to watch it. That's for sure. It doesn't take very many minutes altogether. So time-wise, if you had the very smallest, for most brokers, this is the smallest, about 10 cents a pip, that still equals over $1,400 in profit. And this is not including compounding. We're going to talk about compounding here in just a second. But 10 cents per pip, $1,400 in 3 hours of your time? Not too bad, right? Equals your time per hour is worth an awful lot. But let's go a little bit further and say $1 a pip. For the most part, that's a 0.1 on most of these pairs, unless it's an index, and that's a 0.01. Remember, there is some fluctuations because not all pairs are US dollar based and therefore equal that perfect 10. But to give you an idea, you don't need a huge account balance to trade a 0.1, but that value of what these pips would have gotten you is about $14,000. $14,000, 20 minutes twice a month. $14,000, 20 minutes twice a month without compounding, right? I show you that to say this. In our group, in our community, we really focus a whole heck of a lot on, let's see if I can't pull it up. Ta-da! Compounding. I did not create this. The credit goes to a super, super genius and spreadsheet, guru, if you will. Well, that's not fair. He's a software developer. He's a brilliant guy, created this, who is inside of our community. All this is doing is randomizing where your wins and losses fall. So if you're not sure what that is, you can look up the Monte Carlo simulation kind of concepts, learn a little bit more about it. But all this is doing is taking your starting balance, your risk per trade, your average win rate, your average win versus loss, and then it's taking the losses, because you never know if they're going to fall on the 10th trade or the 12th trade or the 13th trade or whatever. You don't know if they're going to fall to 10 in a row or none for 20 trades, because they do fall randomly. So all they're doing is taking that information, randomly putting that in a nice little generator, and it's showing you what your potential reward is. So we just said we were up technically 36 trades, right? That means with compounding, a $1,000 account, only risking 2% per trade, given the actual information we just saw in that spreadsheet, the actual results we've actively accomplished together, you and me and all of YouTube, right? What that equals so far, approximately, okay, is about $13,000 with compounding, only starting with $1,000. Now, just for giggles, I do want to do one thing before we pop off and go actually look at the charts. I'm sorry. I do want to do this because it's important. Let's go to $500, okay? Let's say your starting balance is $500. This is the kind of money that you can afford to lose. If it's not the kind of money you can afford to lose, you definitely shouldn't be putting it in there. So, whatever that number is for you, I'm not going to go 3, I'm going to go 5. If your accuracy, is that good, let's go up a little bit more, right? We're not going to stick with 4 to 1 either. We're just going to do a 1.5. So let's say you get to 1 to 1 risk to reward ratio, and now you're going to make a corrective active move, and anything including applying a trailing stop, applying your management, scaling out of a portion, but making some kind of actionable decision in your trade. Even if your starting balance is only $500 and you're only risking 5%, you're maintaining that pretty good accuracy in 36 trades. Okay, I'm going to stimulate this a little bit. Give me a second. When I hit F9, it recalculates. There we go. So you can see how this number is changing, how this is changing, because the wins and losses are falling in different spots. So just watch for a second. So right now we're at a 1.5 to 1 risk to reward. Okay, you can see some of that times in those trades you averaged an 88, some of those times you averaged a 91. But to give you an idea, even with such a small starting balance, risking a little bit more, you're not even getting the whole entire part of the trade, you're still making an awful lot of money for 20 minutes, right? Twice a month, 20 minutes. Now, mind you, most of those trades are performing much better. So likely you'd be closer to a 2 to 1, assuming you missed some of those calls, you caught all the losses and none of the gains. Let's normalize this just a little bit and downplay it to where your accuracy is less. Your win to loss ratio is about a 2 to 1. Remember, on that spreadsheet, we've got greater than a 4, just so you guys know. Okay. What's plausible? Keep an eye on this line right here, because it's approximately how many trades we've done live, public on YouTube. We got 9,000 as the high, 11,000, 4,000 as the low. And that's including your losses. So a lot of people want to show you, hey, 1,000% bajillions of dollars and no losses. I want to show you what's possible, including your losses, including the times where the trade went bad, okay, and they just fall sporadically, right? And using a consistent set of management, consistent set of risk on every trade you take, regardless of the pair, regardless of the value. This is what is possible with the skill set. So that's enough yapping and rambling. I hope that this excites you as much as this excites me, because even publicly, live, in this 4-hour experiment, and I know I've got people in the chat who are messaging, who are DMing, who says, hey, I'm up X percentage. Hey, I've accomplished X this. We've got another guy on one of the social media saying he passed a prop firm challenge. I haven't talked to him yet personally, but we'll get a little bit more information on some of this stuff. Either way, this is working for those who are working it. I know in this channel, we're not doing like the super flashy and the super sales pitchy stuff. My only goal, though, is to help people understand that this is what this, skill set does for them. So without further ado, I'm going to minimize this and take one more look. These are the trades we're going to be reviewing, and then these are the trades we're going to be talking about. So let's go over to the chart real quick. So let's take a look. These blue highlighted ones right here are all the ones we looked at on the 19th. These purplish ones are the ones we're going to look at today. I'm going to talk a little bit more about this week being NFP and, of course, JPY, but we're going to end on that and not start there. So I guess we're going to start on silver. We discussed this and did not call a trade idea. We really left it open-ended. Was looking for the potential breakout, never really got it. It didn't look also as appealing as I wanted it to in comparison. Loved the double bottom, but for a multitude of reasons, we did not call this as a trade. We just analyzed it. So had you taken it, how many ATR would it have moved approximately? Figure the 4-hour ATR from where we were to where it moved, all staying within range. That's about 58 pips, about 2 ATR, right? A little bit more than 2 ATR. Here's your couple of fractals back. So in this case, not the best one to start with, but we're not trying to, what is that? Rose-colored glasses. We're trying to show the real. So to kind of give you an idea, this would not have even been 1-to-1 if you had used actual down here structure to kind of give you an idea. But still, we're good. We know exactly what we did here. We know that we wanted to track that. For those of y'all who took it, you were instructed no matter what to protect within about 25 pips or 1 ATR. In this case, it's pretty close on, to that. So either way, you should have been protected. You should have got your pips one way or the other, and it performed okay. Not my favorite, obviously. Let's take that off of our watch list. We had 2 Australian pairs. Always take that with a grain of salt. Was really waiting for the US dollar to make its, huge move. It clearly didn't. This is the odd USD on the 4-hour time frame. Here's where our entry was. The ATR is about 24 pips. This moved a little bit, 56-ish, right? It's hard to see with that darn circle in the way. 2 ATR before coming down. In this case, we still get better than that 1-to-1 because look at where our fractals are sitting, right? Look where those are sitting to kind of give you an idea. So not bad. It is, this is real trading. Not all trades are going to look perfect and like this huge drop of a move. But here we go. Let's keep going. The good, the bad, and the ugly, right? Take that off of our watch list. Odd NZD is next. This one's a lot smoother. This one's one of those super sexy, super perfect, amazing. Here's where we were looking. Our most recent fractal, even all the way up into here. Kind of give you an idea. We came up into range and then just tanked beautifully. 200, 198-ish pips. Definitely awesome move. Minimal drawdown, minimal time in drawdown, and then we just caught it at the right moment. But this is the same trade that, has been consolidating for a hot minute too. Just something to factor in there. Overall, that was an awesome trade. Great way to be. Let's take this off of our watch list. Oops, one more. And now I have to pause for a second. We've got to talk about Japanese yen. So before I even go here, we were live this morning. Every one of these platforms, you guys only see one right now on screen, but I've got 4 plus another computer next to me. We were literally live when this happened, to give you an idea. So the typical ATR on this is definitely not that big, but take a look. This moved 200-300 pips in literally seconds, like literally seconds. If you go to GBPCAD, this moved 400-ish pips in seconds. Seconds. 321. It was insane. There's quite a few news articles on this. We looked a little bit this morning. Some of the feedback was just all over the place. And of course, YouTube did not fail to have a whole bunch of things come out that was talking about anything from, the collapse of the Japanese country as a whole within the next X amount of years and their culture and the people and baby boomers and blah, blah, blah. Really, it was the finance, right? And the pushing of that. Supposedly, they didn't want to see it go to a certain price point, and that was USD JPY. This one right here. They pushed it as soon as we got near to 150. But we'll see. Needless to say, we, in this case, caught the best end of this. This was the other trade we looked at on 9/19. We had minimal drawdown, stayed within range, and this happened to tank beautifully. 451 pips. Obviously, great trade. It's nice when you catch the right side of it, but sometimes you catch the wrong side, and you have to be prepared for that in this market. As the economy and the whole world at large is just going through and growing through its problems, right? Its economic situations across the globe, we need to be prepared for that. So management is key no matter how you look at it. Brokers can only do so much. Liquidity is only so available from every different aspect, no matter how you look at it. There's only so much liquidity, and when there's this much of a move, it doesn't matter. There's nothing you can do. I got some messages saying, well, can't we just negotiate with the broker or argue with the broker to get that back? We didn't have a trade on this, but no, you definitely cannot, not in a case like this. So Chef JPY, we caught that. Beautiful, awesome, amazing way to be. Great amount of pips, great risk to reward. And that concludes all of the trades that we looked at on 9/19. So, brand new week. Before I even get going, I want to say I was hesitant. I was like, man, maybe I'll do a different video tonight because I don't love a lot of what I'm seeing. So for just a second, I'm going to click through. I still am looking for the potential buy up on multiple pairs. So I'm really looking for the sell down, more accurately, of the dollar. As you can see right now, the dollar is still extremely strong. No look of turning around, at least not just yet. But yes, technical analysis wise, I am looking for the potential buy on multiple USD pairs. They're simply not ready. So I can kind of click through. This is odd, Euro, GU, NZDU, EURCAD. There's a harmonic on this. I'm in this currently. Sitting, minimal drill down, but I am sitting still. USD chef, nothing really. So if we click through, same thing with gold. I am definitely not the only trader on the planet, investor who is looking to buy gold. It just hasn't given us a reason to yet. Today being this week, I should say, being NFP, I would definitely play it quite cautious, especially after seeing what we just saw today, this morning. We had the indices drop quite a bit. S&P, UK, we're still holding that sell. We had a couple positions on this from all the way in here and in, I think it was here and in here, give or take. Beautiful positions, smaller time frame entries, of course, but overall, great setup. Wait for a pullback, but I think this has a lot more room to the downside. I digress. The market's a little shaky, so please trade it as such. Now, as I click through, you guys can see a lot of the pairs that I like the best, either the setup isn't ready, okay, or it has already moved a decent amount and might have a pullback. So please take these next few with a grain of salt. I liked quite a few of the Euro pairs, to be honest, and even as I click around timeframes and look at the bigger picture, I think they have some room. EURCAD is one of them, so let me think. EURCAD, here's what we're looking like on the daily. So even if we're only coming up into this ADR high range or coming up into that previous liquidity void next order block area, we've got plenty of room to make our decisions, no matter how we look at this. Right now, we are sitting at an area of interest, though, and we've already made a sizable move considering the pair. So if we decide to take this, back to the 4 hour, if you decide to take this with me, here on the candle prior to the one we're on, looking for a buy. Ooh, that's a thick line. Please forgive that. We were demonstrating the harmonic stuff with that thick line. Holy cow. That's a thick line. We're going to fix it, though. Let's fix it. So looking for a buy pending as we break out of this area. The 4 hour ATR is only about 35 pips. So what does that mean? That means if we're waiting for the continuation and the confirmation, this is about 2 ATR, even up to the ADR high, which is going to clear these levels. If we manage to stay above, my next level is really only 75, 80-ish pips away. Beyond that, we've got approximately 180-ish pips. So not bad considering our most recent kind of couple of fractals. This is kind of where I'd be considering my stop loss. You can consider here, this is too far. Just know with a move this big, if we pull back, we're going to pull back pretty far. We're going to pull back to retest the low before we do get the breakout. So just something to consider. Otherwise, keeping this as simple as possible. The strategy, very simple. You've got our arrow. We've got our continuation. We're sitting pretty close to that same price point now. So not a bad trade. This is one. Looking for the buy up on EURCAD. Always protecting within 25 to 50 pips from 1 ADR. You know where your stop losses are going to be. 1 to 3 fractals back. Totally up to you, but be consistent. That's one. Notice how we're double dipping on the CAD because we're not really touching the US dollar. First off, they're not ready. But secondly, these were the better setups for all the double dipping that would need to be happening. Here's where we're at GBPCAD on the daily time frame. Huge, beautiful, huge move. We did push up. We haven't got much of a pullback yet. So this is a decent little 20 some odd percent retracement of this big move. So just know that if we decide to take this buy, we can get the retracement before we get the buy up. Just please make sure your account has room. Otherwise, we've got our confirmation. We haven't really got the breakout. We haven't got the continuation just yet. We have not. I'm going to put this right here. Look at that price point. As we continue up, we're looking to buy 4-hour ATR is 36 pips. You're looking to protect within 25 to 50 pips, no matter what, no matter what's going on. Set an alert, set your management, do what you got to do. Or, of course, ATR, that's 36 pips. So, not bad. Not at all. This one, we've got a sizable amount of room. I'd be looking to bring price at least into this area. That's 200-ish pips away, but really, well, I want to see how it reacts in and around this area. As long as we get the full-bodied candle, the breakout, the retest, and the continuation, I'm looking for closer to 300-ish pips on this pair. So we'll see. 300-ish pips on the low end. As you guys can see, up until this point, we've got about 550. Now, are we going to get that? We'll see. We'll see what happens with the Great Britain pound as well as the CAD. I'm looking to sell some other things on the CAD, but different topic there. NZDCHF is next. Again, I didn't love all of the pairs that I looked at tonight. I'm not going to play with crypto right now. If anything, you're too close to the structure to sell into it, and the buys would be too short-lived, and the fees are high. But this was my next one. So again, candle prior to the one that we're on. This one's going to be a little bit messy. First off, look at the size of the spread. So we're not taking this right now. We can't take it right now. You got to give it a little bit of room. The size of that spread is almost half of the 4-hour ATR. That's a lot. That's a big spread. Really, really big. We don't quite yet have our arrow, and I just want to point that out as well. So we're still technically sitting in neutral territory. What I'm going to do is I'm going to go to the line chart. Unfortunately, I don't get a great view of those little stopping points, but from this point on, and we'll go clean that up a little bit, I'm looking to sell, but I would personally set an alert here and not necessarily a pending order. Set an alert so you can come take a look and kind of just mitigate that huge spread. So you guys can see it is pretty darn big. So to stay true to form, I'm going to have to bring this all the way over here to say beyond this price point. I, again, would definitely consider an alert versus a pending. I'm going to set my alert here, and I'm also going to set another one here. Odds are I'm going to take this a little bit later than I would like to, but I'd rather take it a little bit later and be confirmed than too early paying for not only the spread, but also not be confirmed. That's kind of how I'm going to play this one. So overall, I think this still has a decent amount of room. Here's our most recent fractal. We are currently pushing up, so no harm, no foul. If these trades don't activate and go in our favor, cool, then we don't take any losses either. But where I'm looking to take this, that's already just 31 pips, about a little less than 2 ATR into this range. I would definitely be looking for a reaction into this range. Beyond that, let's go take a look. Beyond that, let's see. So we're looking into here is our first reaction. Then all the way into here. It's about 115. I'd round that down to 100 just to be on the safe side. Kind of hitting both of these two key areas. So not bad. You're still looking at about a 5 ATR take profit. So overall, I think this has got some room. But NFP week, please trade responsibly. Please protect your trades. Please make sure you apply your trailing stops. Please don't forget to have some kind of management in place. And other than that, if you're taking the trades along with me, please do put them in the chats on YouTube or on social. I'd like to know how they're doing. If you're taking them with me, live or demo, doesn't matter. My next question to you is, how are you managing them? Like, what are you doing? Are you following the things that we're talking about on screen? Or what are you doing that's working for you? Or what are you doing that's not working for you? I'd like to know that stuff, and I'd definitely love to get the opportunity to work with you a little bit and see if we can't, even on this public side, help you get from where you're at to just a little bit better than blowing accounts or a little bit better than break even, right? Just get you from where you're at to your next level. And since we're all starting in different places, I don't get to decide what that is. I'm just here to help you hopefully get to that next level for whatever that is for you. So I hope you guys all have a happy Tuesday. I am off to soccer with my little man. I will be back on in a couple of weeks. Take care. God bless. And I will talk to you soon.